Hey, everybody. Hi, this is me, Letters Chauskas from Easy Markets, and this is the Daily Pitcher International breaking. We have a very, very busy day today, of course, from in terms of economic data sets. So, apart from the usual NFPs and usual unemployment rates that we're getting today from the US, look, we also have one piece of information that I really want you to focus on, and that's the average hourly earnings, month on month and year on year numbers. But look, I'll get into all that in a bit. Just before we go any further, quick read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, um, I'll give you a few seconds to read the rest. I mean, look, that's absolutely fine. We need to kind of, we need to kind of explain that this is quite important to people. But look, also just before we jump into all that data, a quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So now then, very quickly, I'll try not to take too much of your time, ladies and gentlemen. So average hourly earnings today. So keep your eyes on that because, like I said, at the moment, the month-on-month figure is expected to improve a little bit. However, the year-on-year is also expected to improve. So this is what's interesting. So we are expecting to see some sort of like a pickup moment here. Last time in August, we saw a bit of a decline. In terms of forecast, so we actually failed to meet our forecast. Most of the time since the beginning of this year, as you can see here, we were either bang on with the forecasts or exceeding those. But in general, since let's say February, we have been seeing a nice decline. So again, nice decline. I don't know. For some, it's a nice decline. For some, not. But the problem is that the average hourly earnings are dropping, and I don't think that this is an indication of a strong economy. So, look, if your earnings are slowly diminishing, right? I mean, um this is a little bit already becoming tricky. So that means that your spending could drop, so that's why I'm going to be focusing a lot today right on the number, because yes, it's expected to improve at 3.7, but if by any chance it comes out, let's say, lower than the forecast, it comes out, let's say, either the same as previous or below previous, now that could be a worry signal. Of course, this could force the stock market to continue drifting lower, apart from, of course, focusing on the usual non-farm payrolls and then unemployment rates. Yes, we will also we will keep an eye on these average hourly earnings, because if those start declining, because in general, okay, the month on month has been holding on somewhat, but the year on year we can see that it is slowly diminishing. So yes, that is a worry signal, and if the number continues to fall below the forecast, and even, let's say, below the previous number, then hey, don't expect a lot of positivity, because like I said, this is an indication that we're seeing a slowdown in the market. Of course, the Fed will, is now considering that one cut, which is fine, but everybody's talking about two cuts in September. I don't know. That's already a little bit on the tricky side in terms of two cuts, because if we do see two cuts, I mean, I think that the Fed will show that they are worried, quite worried. And normally the cuts would be a good thing, but I don't know if two cuts could sparkle well with the bulls, so yeah, I think that one cut will be enough this time, and then they will play the wait and see game. Looking at the stock market right now, Dow Jones has been on the decline. I mean, looking at these futures here, I talked about these in my webinar, which you can join always as you, if you want, 6 o'clock GMT time. But look, we are at the on the move to the downside, and to be honest, everybody keeps on talking about September not being the great month, and look, I'm not arguing with that. It is, yes, it's not not one of the greatest months, but so yes, more downside here could follow, and maybe all the stars could align nicely, and we could see lower numbers. I'm not saying that I would like to see those numbers. I'm just saying that this could be in line with the whole idea of seeing further declines in the stock market. S&P is not feeling very well, so I'm leaning towards the downside here, on the S&P, on the Nasdaq. So everything is pointing more towards some lower levels. Everything's working out according to the plan. But for now, let's keep our eyes on the numbers here, because don't forget, like I said, don't forget that we are on a decline right now on the average hourly earnings, year on year ones. And let's see if that pattern can persists, because if it pushes back up, then okay, maybe the stock market is not going to sell off that much. But if the number comes out lower than the forecast, or below the previous even on the year on year here, then yes, of course, this is not really gonna work well with the bulls. So, ladies and gentlemen, that's it. I just wanted to pick up on that piece of information because, like I said, everybody's focused on the NFP and the unemployment rate, but nobody's talking about this. So, yes, hopefully you enjoyed the session. Let me know in the comments if you know what you think about all this. What do you think about the job numbers? Because that's going to be quite interesting. Where do you think the market will go? And yeah, always do the same thing. Please subscribe. You know, that would help us out a lot, and help me out a lot, and also help you out not to miss out on these little intakes that we do on these important data sets. So yes, I hope you found this useful. I'll see you later, ladies and gentlemen. But if I'm not going to see you this week, I'll see you next week for more info. And yes, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you later. Bye bye.